Robert Kiyosaki once said, "The single most powerful asset we all have is our mind. If it's trained well, it can create enormous wealth." And this is where we start our journey, delving into the insights of Robert Kiyosaki, a man who has made a significant impact in the world of finance. Kiyosaki, the author of the best-selling book, Rich Dad, Poor Dad, and a seasoned investor, is a staunch advocate for financial education. He believes that the key to wealth creation lies not in the size of your paycheck, but in the power of your mind. Kiyosaki's philosophy is quite straightforward. A well-trained mind can create enormous wealth. This is not about having a high IQ or being a genius in mathematics. Rather, it's about understanding the rules of money, about knowing how to make your money work for you. It's about financial literacy. Financial literacy is not just about understanding numbers and complex financial terms. It's about understanding the economy, the market trends, the value of investments, and the power of compounded returns. It's about knowing the difference between assets and liabilities, understanding the power of passive income, and the importance of risk-taking. The sad reality is many of us were never taught these things in school. We were taught to work hard, get a good job, save money, and maybe invest in a retirement fund. But is that enough to create wealth? Kiyosaki doesn't think so. He believes that to create real wealth, you need to understand the game of money, and to do that, you need financial education. Investing in financial education doesn't necessarily mean going back to school or getting a finance degree. It could be as simple as reading books, attending seminars, or even watching informative videos like this one. It's about continuously learning and staying updated. Remember, the market is always changing, and the rules of the game are constantly evolving. To stay ahead, you need to keep learning. You need to keep training your mind because, as Kiyosaki says, an investment in knowledge pays the best interest. Kiyosaki's second piece of advice is, know the difference between an asset and a liability, and buy assets. Now, let's get into the nitty-gritty of what this advice truly means. Kiyosaki's definition of an asset and a liability is somewhat different from what you might remember from your high school economics class. According to him, an asset is something that puts money into your pocket, and a liability is something that takes money out of your pocket. Simple, right? Let's delve deeper. Imagine you own a rental property. Each month, the rent you collect from your tenants exceeds the cost of the mortgage, taxes, and maintenance. The surplus is money in your pocket. This property, therefore, is an asset. On the other hand, say you buy a brand new luxury car, it's shiny, it's fast, and it's yours. But every month, you're making hefty payments to keep it in your driveway. Plus, don't forget about the insurance, the maintenance costs, and the gas. This car is constantly draining your wallet, meaning it's a liability. This concept is the cornerstone of Kiyosaki's investment philosophy. He argues that rich people become rich because they acquire assets, things that generate income like rental properties, stocks, bonds, or businesses. These assets work for them, producing a steady stream of income. Conversely, the poor and middle class tend to accumulate liabilities, things that create expenses. They buy houses that they live in, cars that they drive, or gadgets that they use, all of which do not generate income, but rather deplete their resources. The key to wealth, according to Kiyosaki, is to understand this difference and to make a conscious effort to accumulate assets. It's not about how much money you make, but about how much money you keep, how hard that money works for you, and how many generations you keep it for. So, the next time you're about to make a purchase, ask yourself, is this an asset or a liability? Your answer could be the first step toward building your wealth. In Kiyosaki's words, rich people acquire assets. The poor and middle class acquire liabilities. Kiyosaki is known for saying real estate is a powerful investment tool for anyone seeking financial independence or freedom. Let's take a deep dive into his perspective on real estate investment. Real estate has been a cornerstone of wealth creation for centuries. It's not just about owning a piece of land or a building, it's about leveraging that asset to generate a steady stream of income. Kiyosaki often emphasizes the importance of cash flow. This consistent revenue, whether from rental income or property appreciation, can provide a level of financial security that few other investments offer. But Kiyosaki isn't just talking about buying a house and renting it out. He's referring to a more strategic approach to real estate investment. This can include everything from residential and commercial properties to real estate investment trusts, also known as REITs. The key is to understand the market, do your research, and make informed decisions. And let's not forget about the power of leverage in real estate. Unlike many other investments, real estate allows you to use borrowed money to increase your potential return. This can mean a small down payment on a property that could yield significant returns over time. However, it's crucial to remember that while leverage can amplify your gains, it can also magnify your losses. Hence, it's all about balance and calculated risks. Real estate also offers some attractive tax benefits. Depending on your location and the nature of your investment, you can often deduct expenses like mortgage interest, property taxes, and maintenance costs. This can help to further enhance your return on investment. In essence, Kiyosaki sees real estate as a game where the right knowledge, strategy, and calculated risks can lead to sizable rewards. It's not about getting rich quick. It's about building wealth over time, achieving financial independence, and securing your future. So, whether you're a seasoned investor or just starting out, consider the power of real estate. As Kiyosaki reminds us, investing in real estate isn't rocket science, it's simply about making smart choices. Kiyosaki encourages us to take risks. If you win, you'll be happy. If you lose, you'll be wise. A simple yet profound statement from one of the world's most influential financial educators, Robert Kiyosaki. Risk-taking is a fundamental part of investing. It's the engine that drives the potential for higher returns. But what does Kiyosaki really mean when he talks about taking risks? It's not about reckless gambling with your hard-earned money. No, it's about informed, calculated risks. It's about understanding the potential rewards and the potential losses and making a decision based on that understanding. Risk, in the realm of investing, is a double-edged sword. On one hand, it can lead to great wealth. On the other, it can lead to significant losses. But in the middle of these extremes, there's a valuable middle ground, a place where you learn, grow, and become wiser as an investor. Kiyosaki's philosophy is rooted in the belief that losing is not a failure. Instead, it's a learning experience. It's a stepping stone towards success. Every loss is a lesson, a chance to get smarter, to refine your strategy, and to come back stronger. It's about building resilience and learning to bounce back from setbacks. Remember, it's not about avoiding risk altogether. That's impossible. Investing by its very nature involves risk. But it's about managing that risk, understanding it, and making it work for you. It's about making informed decisions and taking calculated risks. It's about finding the balance between potential reward and potential loss. So don't fear the risk, embrace it. Learn from it, because it's through risk-taking that we truly grow as investors. It's through risk-taking that we unlock the potential for greater wealth and financial freedom. And remember, as Kiyosaki himself puts it, the biggest risk a person can take is to do nothing. So take that leap, make that investment, and remember, whether you win or lose, you're always learning, always growing, and always moving forward. Robert Kiyosaki insists the key to financial freedom and great wealth is a person's ability or skill to convert earned income into passive income. This is a profound statement that encapsulates the essence of passive income. But what exactly does it mean? Passive income is money that you earn without actively working for it. It's the financial equivalent of a tree that keeps bearing fruit season after season, whether you're tending to it or not. In contrast, earned income is the paycheck you receive for the hours you put into your job. You're trading your time for money, and the moment you stop working, the money stops flowing. Kiyosaki emphasizes that the path to financial freedom lies not in working harder for earned income, but in creating streams of passive income. This isn't about getting something for nothing. It's about smartly investing your time and resources today so that you can reap the benefits tomorrow, next year, and decades down the line. The beauty of passive income is that it's not tied to the number of hours in a day, it's not limited by your capacity to work, it's a way of making your money work for you. So how do you generate passive income? There are countless ways, but Kiyosaki often points to investment in real estate and businesses, intellectual property, and the stock market. For instance, buying a rental property can provide a steady stream of income long after the mortgage is paid off. Investing in a business can yield dividends year after year. Creating a popular blog, writing a book, or designing a successful app can continue to generate income long after the initial work is done. The key is to shift your mindset from working for money to making money work for you. It's about leveraging your resources, your knowledge, and your skills to create something that continues to pay off long after the initial investment of time and effort. In the end, Kiyosaki's advice can be summed up as, work to learn, don't work for money, make money work for you.